Good morning, everybody, and welcome to today's Monday morning mortgage update. We've got a lot going on this week, so we're going to jump right in. Thank you so much for tuning in today. Again, my name is Sean Wohland with the Wohland Mortgage Team, and I am here with today's Monday morning mortgage update. So let's jump right in. We have a lot going on. As you know, we've got a lot of trade agreements. We've got inflation coming out this week. So we're going to go over that real quick and how that's impacting mortgage rates because it's been a wild ride. We'll kind of go over that in detail here. So let's look at the inflation numbers. So currently we have a headline of 2.39. April of 2024 was 0.29. March we had a lower, but we're expected to be closer to 0.3 or in between 0.2 and 0.3 for April here. So we've got some things that are happening in regards to shelter that are a little bit hotter than expected. This OER, owner equivalent rents, is hot. So that inflation piece is 44% of the overall CPI. Get this, guys, the OER, you know what that number is? That's a huge part of our inflation number. That's the survey on people calling homeowners and asking them what they think they would rent their home out if they were to rent it today. That's where that data comes from. So not sure how accurate that is, but needless to say, it does impact the inflation numbers. I honestly believe that we're going to see a little bit hotter inflation as it comes out this week. That could hurt interest rates a little bit. Energy prices are lower, so that is going to maybe counteract it a little bit. So we'll keep our fingers crossed on the overall inflation numbers. But if the inflation numbers come in hot, like I expect them to be, we could be in for a wild ride, a little bit higher on rates. So let's look at the other items that are impacting our market, and that's the tariff deals. So there's some pretty massive negotiations. There's a lot of different people kind of fighting over what these tariffs are doing to the economy. Overall, the goal is to have more of a free trade between all of the countries. The overall negotiations are rough. Let's just say that. Tariffs on China were at 145%. Just now they got lowered to 30%. So this should get things moving on the goods perspective. I don't know if you know this, but on Friday there was no shipments from China. So they're playing hardball. They are definitely playing hardball. But the overall goal is to get it down so that the trade between our countries is a lot more fair because there is a massive trade deficit. The stock market actually really likes this tariff agreements that's happening. So you've seen over the last couple of days a pretty big move in the stock market up. And remember, when people invest in the stock market, a lot of times they're taking the money out of the bond market and investing in the stock market. So that's hurting as well, hurting mortgage rates. But further negotiations are in process with these tariffs, but it's not helping the bond market or mortgage rates as we move forward. Here's a look at the candlestick charts. And if you can see last week, the beginning of last week, we saw a pretty big fall off. So we saw mortgage-backed securities lose almost 100 basis points. It was a rough week. We saw a little bit gain back, and then we lost more again on Friday. Thursday. Tried to gain it back a little bit, and then today we're below these Fibonacci levels. So as you can see, the trend on the Fannie Mae 30-year bond is lower. That means rates are higher. And we're stuck on this 100-day moving average right now. We, as far as gaining, so we're below this Fibonacci level, which means we have a lot more to lose. So let's look at the 10-year too, because it's not a good trend there either. We saw the 10-year go sky high over the last week and a half, and it pierced through all these levels of resistance, just bounced right through these. All the way through, and then we've got some room to go. So I'm not really excited about what the technicals are showing as far as what interest rates could do this week. We really need a good surprise on inflation for these numbers for these to come back down to reality and go back to earth. Rates still aren't terrible. Over the last couple weeks or couple months, I should say several months, they've been bouncing between like the 6 3/4 to 7 1/4. So not terrible, not great, somewhat consistent, but in big swings. That's kind of where we've been. Right now on a traditional 30-year fixed, we're right around the 6.9, 6.89. The trend is definitely higher. 15-year absolutely a little bit lower. Jumbo money, right around the 7% mark. You can get adjustable rate mortgages a little bit cheaper. You'll probably save about a quarter on those right now. And FHA and VA are always a little bit lower, but they do have big fees associated with them. FHA has the FHA has the MIP, the mortgage insurance premium, which is 1.75% of the loan amount that's rolled in, so it's a pretty big fee. And VA has the VA funding fee, except for those veterans that have disability, and that gets waived. So that's a little update on what interest rates are doing today. Here's what's happening this week. It's going to be a really busy week. We had bond rollover today. On Tuesday, we have the CPI report, the Consumer Price Index. It's going to be really interesting to see how this really impacts the market, see what this number comes in tomorrow. Wednesdays, nothing's really happening. And then Thursday, a lot is going on. We've got the PPI, Producer Price Index. We've got retail sales for autos. We've got pardon me. We've got, let me ignore that phone call. Sorry about that, guys. We have retail sales numbers come out. Fed Chair Powell is going to be talking as well. And then we have the energy and the year over year coming out. Initial jobless claims are coming out, continuous jobless claims. There's all kinds of stuff. We have manufacturing coming out as far as the survey and the index for the New York Empire manufacturing. Lots going on. So Friday, not as much. We have building permits, housing starts. We'll see how the housing market is really keeping up with what is happening in the markets. So that's our Monday morning mortgage update. Let me know if you have any questions. I'm here all week. Not going anywhere after hours as well. You know the drill. I'm always available. Look forward to helping you guys. Have a great week, and we'll talk to you soon.